let's speak to Tomiwa Jawolena, analyst with financial derivatives company. It's still the gold trade at this point. So talk to me, what is this gold surge? What does it tell us about the current state, of the global economy and, investor sentiment?
Hi, Larry. Good afternoon. Thank you for having me. I think first it's important to reiterate the fact that gold is a safe haven asset. And when you have the global safe haven asset rising 50% in a year, having an annual gain that's not been seen in 46 years. And since March, that's just been breaking record levels 42 times you were counting. So it says a lot to the level of uncertainty in the global economy. And we can just take an example, the most recent one that's pushed it up in the past 2 or 3 days. We have the US government shutdown, and because of this, won't be able to have access to some job reports, some data that the Fed needs to analyze to make some interest rate decisions. And this is increasing the level of uncertainty, because if the Fed cannot make the right decision, to be able to make, especially in the current situation where the Fed, has pivot to monetary easing and where we're having lower interest rates. And lower interest rates typically reduces the value of the dollar, which is making investors skeptical, and so we have to run to gold. And I think it just shows the level of uncertainty in the global economy. Even if we go away from the US, we go to France, where there are a little bit of political interactions, and then even if we go to Japan. So we're seeing at the global level a lot of uncertainty, and also we're seeing geopolitical tensions also feeding into it, because dollar has always been the world's global currency, and now we have the dollar weakening by 10%. So gold is also a store of value, and if you want to make sure that your assets are still good value and not affected by inflation, investors are running onto gold. So that is why we've seen a huge surge into gold in this year, and forecasts are expected to reach about $4,600 per ounce this year. So I think, but there's also the risk that it could come down. There could be some profit taking, so it needs to be navigated easily.
Right. I guess we can call 2025, with this rise, the golden year, at this point. But we see, Goldman Sachs, they've raised their 2026 gold price forecast by an additional 14%, citing robust demand, from central banks, in Western countries. But I'm wondering what happens if this global demand begins to cool. I guess that's lower prices for gold.
Sorry, come again. I didn't hear that.
So I'm saying if demand cools, from what we're seeing from the central bank.
Yes, we're seeing. So right now, demand is actually still rising. As I said, because the uncertainty level is increasing, but there are risks that demand could fall. But now we're looking at the fact that the US Fed is likely to is pivoting to a monetary easing cycle, which is likely to weigh on the dollar. The dollar is already 10% this year, so if the dollar is going to weaken further, that is leaving more room for growth, because the dollar and the growth have an inverse relationship. So in the near term, we expect that the gold prices will definitely still increase, because there's increasing demand for it. Global central banks, as I said, are also pivoting away from dollar because of the increasing geopolitical tensions. We're having tariffs up and down, and you have to make sure that your financial assets are are secure. So in the near term, yes, we're still going to see high demand for gold.
Tracking that, thank you so much, Tomiwa Jawolena, the analyst with financial derivatives company. Thank you.
Thank you for having me.